We asked 4 pressing questions posed by investors to some of the top investment advisors in the country. Here is where these experts view the risks and opportunities in today's markets. Which asset classes do you feel are most attractive over the next 12 months? And which do you feel have the most risk?
The asset classes I think are most interesting over the next 12 months are going to be infrastructure. I think that as we're revamping our energy supply, that's going to be very helpful. I think the U.S. Equities market can also be very good with the AI stream that's coming and will probably have more waves to come. On the risk side, I think small cap might have a little bit of issue, as well as emerging markets, for some of the same reasons that they're dollar sensitive and interest rate sensitive, and that's a real big unknown at this point in time.
Most attractive is fixed income for one. That's a no-brainer. That's on the low end of the risk spectrum. If you want to take it up the risk spectrum, I would say small caps, which also coincidentally will also be the most risky area of the capital markets over the next 12 months. So I think you have to look through the 12-month window, but the small cap market seems very interesting to me, even though it has excess risk.
I think you do have to continue to lean into companies that will benefit from AI, and I think a lot of companies can, because it does do a lot from a productivity perspective. But again, I do think one of the mispriced areas is healthcare, because they can really benefit from what AI can give to them, and I do think it's overlooked, and it might be a little bit longer than 12 months, but I think for the long term there's some real opportunity there.
The asset classes that we feel are most attractive over the next 12 months are really the residual 493 companies in the S&P 500 that are not the Magnificent Seven. We're looking very closely at those. We also have, in my own shop, been underweight small cap, mid cap, and international exposure, and we think that international is really starting to become compelling at these levels.
The asset classes that I feel have the most risk over the next 12 months are going to be manufacturing, and more specifically the semiconductor industry, as for the last 5 decades the United States has really been in the process of offshoring most of our manufacturing capacity. So in terms of supply chain, any industry that's making things that's sourced from abroad will be subject to the uncertainty of the tariff and all of the impacts from that.